Valued guests, please give us a short moment before we move on to part 2 with the next speaker.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. We have come to the second part of session 3 and the final session for today's corporate conversation series, jointly organized by Bursa Malaysia and RHB Investment Bank. As in the first part, this session is also to have an overview on global growth and sharing ESG assets, including Sukuk, as well as the current and future trend based on sectorial and the outlook in years to come. This time around, we have Dr. Muhammad Damak, Senior Director of Financial Services, S&P Global Ratings in Dubai. In this capacity, Dr. Muhammad leads S&P Global Ratings cross-practice analytical thought leadership initiatives and credit rating activities in the Islamic finance sector globally. Our distinguished speaker holds a PhD in finance and master's in money, banking, and finance from Panthéon-Assas, University of Paris II. His research interests include digitalization of the financial services industry, including cryptocurrencies, stablecoins, tokenization, and digital coins. He is a regular speaker at industry events and conferences. Welcome, Dr. Muhammad.
For having me.
Distinguished guests, ladies and gentlemen, as I mentioned earlier, global Sukuk issuance is expected to be around $130 billion in 2022, and as compared to $147.4 billion in 2021 and $148.4 billion in 2020. And it's been reported that the slightly lower is mainly as a result of higher global oil prices and anticipated higher global interest rates. These concerns, coupled with ongoing spread of COVID-19, current negative investment sentiment, and complexity of issuing and investing in Sukuk, may negatively impact the market. However, the increase in environmental, social, and governance-linked Sukuk issuances and the emergence of new issuers will provide a bright spot for the global Sukuk universe. And as at the end of 2022, ESG Sukuk makes up 2.6% of the global outstanding Sukuk. So let me start by asking Dr. Muhammad, in terms of your prediction on the outlook of the global Sukuk issuance for 2022. I think that's as the end of the second quarter, sorry. Would you expect an increment to the share of the global outstanding Sukuk in the next 5 years?
Right. Thank you for the question. I think we expect that the overall volume of Sukuk in 2022 will drop to around $130 billion compared with 147 in 2021. And that's primarily because of the lower and more expensive global liquidity, the setbacks related to the complexity in structuring Sukuk, which was further impacted by the adoption of AOEFI Shariah Standard 59, and the high oil price, obviously. And as a matter of fact, the drop has already started, because when you look at the numbers in the first 9 months of 2022, total issuance reached $112 billion compared with almost $130 billion during the same period last year. And the drop was even bigger if you look at the FX issuance, which reached almost $25 billion compared with $41 billion last year. Now, the long-term level of issuance of Sukuk will depend on a few things. One of them is the future development and implementation of standards. And at this stage, when we speak to the investors, the main concern that we're hearing is that sometimes in the future, the new Sukuk will no longer be perceived as fixed income instrument, but will more become like an equity instrument. And that, again, will change the face of the market for good, because the pricing of an equity instrument would be completely different from the pricing of a fixed income instrument, and the volume of investors would be completely different. Fortunately, at this stage, there is no indication that this will be the way forward, but this is a key risk on the investors' radar.
Okay, yeah, there have been discussions, again and again about the equity kind of sukuk, whether it's a debt base or equity base things. And you mentioned about the projection. So would you be able to basically to break it down in terms of the ESG or as against a normal sukuk? Because you mentioned about 30 million billion, right?
Right. So currently ESG is about 3% of the total. ESG sukuk is about 3% of the total amount of sukuk outstanding, so around $20 billion. And the alignment between Islamic finance and sustainability consideration is hopefully clear to all the participants in the industry. And the debate in the industry these days is how to move from the negative screening, meaning that you focus only on Shariah compliance, to a positive screening that would focus not only on Shariah compliance, but transactions with higher added value in terms of sustainability. Now, the opportunities, they are significant. 80% of the industry assets are in oil exporting countries. These countries have objective to decarbonize their economies, an objective to transition to net zeros, an objective to transform their economies away from the oil sector. An issuer want to remain on the investor radar by offering products that incorporate ESG considerations, because today the number of investors incorporating ESG consideration in their investment mandates is growing day by day. And the key question for Islamic finance comes down to the structuring of this instrument and whether these can be seen as attractive for both issuer from a time and cost structure. Is my sukuk attractive compared with a green bond or a sustainability bond from a time and cost structure? And for the investors, do they understand the risks? Is it aligned with certain ESG principles or certain taxonomies? And the risk is that if issuers and investors do not see the financial added value of the sukuk as an instrument, then all the demand and offer will likely go to the conventional route compared with the sukuk route. And that reminds me, a decade ago, sukuk were presented as the panacea for the infrastructure financing issue in Africa. 10 years down the road, we've seen only a handful of sukuk being issued in Africa, because most of the issuers, when they looked at the amount of work and time and money they need to invest in order to make it to the finish line of issuing sukuk, simply decided to walk away. And that's exactly the challenge that the industry is facing today.
Okay, I think coming back to the compatibility of Sharia compliant, or rather sukuk and ESG, they seem to share one features. Okay, so having said that, do you see that ESG sukuk will be the key issuance themes in core Islamic finance market? For instance, let's say Saudi Arabia or Malaysia or Dubai. So do you see that coming?
Right. Would it be the core component? Probably not. But would it contribute to the issuance? Absolutely, yes. Again, these countries, if you look at the structure of the Islamic finance industry today, 80% of the industry assets are focused in oil exporting countries. And these countries, look at Saudi, Vision 2030, UAE, transition to net zero by 2050, et cetera, et cetera, et cetera. So the opportunities are significant. But in unlocking these opportunities, the sukuk as an instrument has to show an economic added value to the issuers and to the investors. And this economic added value materializes through being, having a process of issuing sukuk that would be as easy and as smooth as as the process to issue a conventional bond. Having a sukuk that would be priced in a similar manner to the conventional bonds from the investor perspective. So all these are prerequisites in order to be able to unlock these opportunities and use the sukuk as an instrument, because the opportunities are there. If it's not sukuk, it's going to be conventional.
Okay. Okay, I think for S&P as an international credit rating agency, you can rest assured you must have rated numerous sukuk, including ESG focused sukuk, and maybe there's more of the, because I think you're more on the analytical side, not on the commercial side. It's just that I just want to have a better understanding in terms of the sector that actually very much involved in issuing the ESG focused sukuk.
And it's good that you're making the distinction between the analytical and the commercial side. So I'm really glad to hear that, because sometimes it's confusing for the people. So today we rate more than $120 billion of sukuk. Some of these instruments have sustainability components, such as the sustainability sukuk that was issued by the Islamic Development Bank. But as you know, the analysts are focused on the coming up with the independent and objective opinions on the issuers and issues creditworthiness, rather than on the amount of what we rate and the number of ratings. Now, in general terms, if you look at the sukuk market, it has been dominated by the government and the government-related entities, and the reason for that is pretty simple. If you look at the structure of the economies where Islamic finance is present, the 80%, which was the GCC in Malaysia, you see a strong footprint of the government and the government-related entities in the local economy. And this is something that is probably not going to change. Now, in some countries, we've seen the government establishing unlimited sukuk issuance program with the objective of showing the way to the corporate. I think Saudi is the most prominent example here. And we think that the implementation of Vision 2030 in Saudi Arabia will see some of the planned projects coming to the sukuk market to seek financing, because we genuinely think that the banking sector alone will not be able to finance all these projects. At the same time, we think that the banking system also would have a role to play in terms of issuing green or sustainability linked sukuk, or even residential mortgage-backed sukuk for some countries. And again, I'd like to go back to the Saudi example, because there the mortgage lending has been growing tremendously over the past 3 years. And the issuance of residential mortgage-backed sukuk or covered sukuk could help easing the liquidity pressure that we have observed lately. And could allow banks to expand the mortgage financing further. So, short answer is that we don't expect we expect the market to continue to be dominated by the government and the government-related entities. And in terms of sector, it's very much diverse. I mean, we saw issuers from real estate developers or operators to airline companies to utilities to, I mean, it's very much diverse.
Okay, correct me if I'm wrong. You mentioned earlier that most of those issuers, especially the ESG focus, are very much of the sovereign or supranational, right? So in other words, it is much lesser being issued by the corporates. Okay, so I'm not so sure if you are in the position to basically to help the corporate understanding or appreciating or creating the awareness of this ESG. You know, I mean, as usual, the common question is just that, what is it in me? What is it for me if I were to issue ESG sukuk as compared to other sukuk? You know, why? You know, this kind of, so I'm not so sure if this question may fit your position as a rating agency. But I just wonder, how do you go actually about in encouraging corporates to move further towards this?
Encouraging, I can assure you that we don't encourage, we don't provide advice. But again, based on what we have observed, the structural economy shows that you have large GREs that have a strong footprint in the economy, and these have been the main issuers. And you have sovereign also that have been the main contributors to the issuance, particularly in Saudi Arabia with the unlimited government program. But that unlimited government program was established to show the way to the private sector. So government, in a sense, wants to push the private sector towards that direction and wants to push for the development of the local capital market, because I think in the core Islamic finance industry countries, only Malaysia has a broad and deep local capital market. In the GCC, we don't have that. Most of the issuance happen in foreign currency. So the government is trying to show the way for the corporate. Now, for the corporate to come in, you need to show them that they would benefit from that. And the benefit could come either from unlocking access to a new asset class of investors that would not come if you do a conventional bond, like, for example, the Islamic investors. It could be in the form of pricing, having a pricing that is below or at least at par with what you would pay in the conventional world, and having a process of issuance that would be clear and smooth for everyone, that the risks are clear and well understood by both the corporate and the investors. I think if you take a situation where you issue a conventional bond, you know how it works, you get the money quickly, you know how much you're going to be paying, or you issue a sukuk, where you could be exposed to some residual asset risk, where you could be exposed to an acceleration of the sukuk because of the breach of the tangibility requirement, where you could be exposed to broader array of risks. Some of the corporates decided to walk away simply because of the additional complexity and the additional perceived risk, even for the investors.
True. I think one of the major obstacles is the complexity of moving forward. So my next question in relation to that is just that, what about the enabling environment? Is that also an issue, especially in those countries? I mean, as far as Malaysia is concerned, I think it's okay. I think it's all there. But what about other parts of the world? Maybe you can share with us on that.
It's progressing. It's certainly something needed. Again, as you rightly mentioned, Malaysia has established its regulatory framework, has standard structures in place. The sukuk process in Malaysia is much easier than the process for international issuance. But the issue with that is that there's a lack of integration between the core markets of Islamic finance. And some opportunities could be unlocked by this stronger integration of the core Islamic finance markets. And as a matter of fact, people talk about the global Islamic finance industry, but there's no such a thing. The global Islamic finance industry is a collection of small industries here and there. In Malaysia, it's broad and deep relatively. It's more than 30% of the banking assets. In other countries, it's marginal and small, and it's absolutely not integrated. So the global side of the industry happens at the sukuk market, which is the second biggest component of the industry, and to a lesser extent at the fund industry, which contributes to less than 10% of the total assets of the industry. And this is where people need to come up with some standards that would be agreeable to everyone, and a certain way of doing things that would be smooth and that would not deter the investors and the issuer appetite. And that's the big challenge that the industry has been facing for many, many years. Now we saw this challenge again in 2021 with the adoption of Standard 59 of the AOE fee, which as you know, the UAE has formally adopted the Shariah standards of the AOE fee, and the UAE is an important player in Islamic finance. So if a Malaysian issuer wants to issue an international sukuk, they would want it to comply with the AOE fee standard to be able to speak to the investors in the UAE. And that created some confusion because it created new risks in the sukuk as an instrument, risks related to the liquidity, the acceleration of sukuk if the tangibility ratio is breached. And it created a bit of confusion in a sense that investors were asking what's next. If the scholars have pushed now for the compliance with this tangibility ratio throughout the lifetime of the transaction, then potentially the next step is to say, okay, the assets have to be revalued periodically. And the next step after that is to say, how come would you execute the purchase and the taking with a fixed price from day one, with assets that are being subject to revaluation. And what happens if the value of the assets drop? And this is how you bring in the principle of profit and loss sharing from the back door. And this is how you transform a fixed income instrument into an equity instrument, potentially losing the fixed income investors. So again, at this stage, there's no indication that this will be the way forward. But in our interaction with many investors, this topic came in and showed that there was a concern. The good news is that the standard setter are pragmatic people and potentially would want to create standards that would add value to the industry and would push the growth of the industry going forward.
I think standardization has always been a never-ending discussion. I've attended the World Economic Banking Conference and this kind of thing. Standardization will always one of the agenda to discuss, and yet I think it's still debatable and it's still questionable, as you're saying. But an issuer from Malaysia, we need to adapt or adopt IOF standard if they are issuing something in the GCC and this kind of thing. So, okay. So, speaking of that, I think it's just a matter of moving forward and try to more of harmonizing those standards and adapting to suit the market. Okay, it's just that one more thing that I'd just like to, you mentioned about this, and you mentioned about the, in terms of the, to harmonize the information and enable companies and investors to better understand the ESG risk kind of thing. So how do you actually develop such your criteria? In terms of what I'm trying to say here is just that we try to make the issuers understand that these are the risks associated with the ESG related, and I'm sure S&P would have your own methodology in terms of assessing the credit, assessing of maybe the ESG evaluations kind of thing. So how do you actually derive this methodology?
Right. So there's two things to be covered here. First, on the credit rating side, we have a very clear methodology that we have published, I think in 2015, and that we update periodically. And when we were crafting the methodology, I think the main end goal was to be as transparent as possible with the investors and with the users of the credit rating. So we were very clear on what are the 5 conditions that a Sukuk issuer has to achieve in order to be rated at the same level as its sponsor, including some of the risks that are proper to the Islamic finance industry and the Sukuk industry, such as the exposure to total loss event, because you don't have that in conventional bonds. In conventional bonds, it's standard legal documentation that has been used for over 4 centuries now, and that people understand the risks very clearly and understand the ranking and the different nuances when it comes to issuing a hybrid instrument. For Islamic finance, it's a bit different because you have some underlying assets. Some of these underlying assets could be destroyed. There could be additional risk to the investors. How the Shariah scholars would agree to allow the sponsor to cover these different scenarios, etc. So this is as far as the credit rating is concerned. Now, on the ESG evaluation is different from the credit rating. It's an assessment of a company ESG strategy and ability to prepare for potential future risks and opportunities. Now, it provides a forward-looking and long-term opinion on the readiness of a company for disruptive ESG risks and opportunity. We build on our sector and company expertise, and then we go into in-depth engagement with the company management in order to assess the material ESG risk for the company, both in the past, present, and future. And in doing that, we obviously factor in the company strategy and policies, and some of these could be based on frameworks developed by international organizations, such as the Sustainable Development Goals or any standard use. So the standardization issue is still there. And in doing our evaluation, we start from a proper view on the industry or the country where the entity operates, and then we incorporate the relative position of the entity compared with its peers. Let me give you an example. For environmental consideration, for example, we compare the issuer to its peers with regards to what they are doing in terms of reduction of GHG emission, or in terms of limiting waste and pollution, or in terms of protecting land use and biodiversity. And that goes not only, I mean, we look at throughout the value chain of the issuer. So for a bank, it's not only the proper footprint, but it's also through the lending portfolio, through the relationship with the suppliers, et cetera, et cetera. So that's the distinction between the credit rating and the ESG evaluation.
Okay, again, as a former credit rating analyst, I'm curious in terms of your assessment from the credit perspective on the utilization of ESG sukuk. Because, you know, in most cases for sukuk, we look at how do they use the proceed from the issuance of the sukuk. So it's clear compliance no issue. But when it comes to ESG, do you take into consideration into your credit assessment?
In the credit rating itself, the key focus would be whether there are sufficient contractual obligations where in order to ensure that investors are paid in full and in times.
Yes.
Now, when it comes to credit ratings on issuers like banks, for example, we have what we call ESG indicators, and these ESG indicators would indicate to what extent E or S or G related factors have influenced the creditworthiness of the entity.
Yes.
To what extent they are reflected in the way we assess the creditworthiness of the entity. Let me give you an example. In the GCC, obviously, oil is an important component of the economy. But when you look at the bank's portfolio, the direct exposure to the oil sector or to the sector subject to energy transition is not that significant. That's why the credit ratings of the banks in the GCC is not so much penalized by environmental consideration. If you look at the other oil producers in Nigeria, for example, typically the financing book of a bank there would typically have between 30 to 40% exposure, direct exposure to the oil sector. And that means that environmental consideration have already had a significant impact on the way we assess the creditworthiness of these entities. So that's in the ESG indicators. And again, the ESG indicators are speak to the way E or S or G have impacted the creditworthiness or are expected to impact the creditworthiness of a rated institution.
Okay, I'm trying to do some analogy in terms of the process. Okay, for instance, all sukuk issuances, all proceeds from sukuk issuances must be utilized in accordance with the Shariah requirements. What if the ESG sukuk been issued and the proceeds are not being utilized in accordance with the ESG guidelines? Will there be any impact in terms of the ratings?
There could be. There could be if there is no, I mean, the link would be through the contractual obligations. So let's say a sukuk is issued, there's a purchase undertaking. The purchase undertaking specifies very clearly that the price or the exercise price is equivalent to the principal. That shows that there are sufficient contractual obligations for the payment of the investors. Now, whether the assets that are being bought are green assets or are other assets, it doesn't have any impact on the creditworthiness as long as there is sufficient contractual obligations, and as long as the other conditions in our criteria for rating sukuk are respected.
I see. Okay, I have a question from the floor. It's asking that do you think the ESG sukuk market lacks product innovation and as such resulted in slower growth? Is there such a thing as in like in terms of innovation of structures?
Right. I think I would link the lower growth rather to the complexity of the sukuk as an instrument itself. Again, I mean, let me give you an example. If you put yourself in the shoes of a CFO of a company, okay? You want to issue a sustainability-linked instrument. You have a preference for sukuk because your shareholders have a preference for sukuk. So you would look at the different options. Option A, issue a sustainability-linked bond. There's been a sufficient track record. Your investment banker will tell you can do that in a few weeks. You'll get the money on the account. Option B, issuing a sukuk with fairly standard legal documentation, although it's a little bit more complex to put in place because it's sukuk. There is the additional layer of Shariah requirement that needs to be taken into consideration, but your investment bankers are still telling you that it's going to cost you the same, more or less compared with the bond, and it's going to take you slightly longer than the bond, but within still acceptable limits. Third option, issuing a pure profit and loss sharing sustainability sukuk. That could take you months or years, and it would cost you much more than the previous two instruments. So a rational person would have a preference for this sustainability sukuk that would be almost equivalent from a time and effort perspective to the sustainability bond, and that would not cost more than that. And this is exactly the challenge that the industry is facing. Now, if the industry were to achieve that position where both instruments would be equivalent from a time and effort perspective, the growth, the growth opportunities would be unlocked probably.
Oh, okay. That's very much on the sukuk. Okay, and as you can see, apart from ESG sukuk, more Islamic syndications are deployed for ESG or green projects, like the Egyptian Finance Minister's 2 billion syndicated sustainable term financing facility, and also more and more Islamic or Sharia compliant funds with the ESG focus launched in 2021, which includes Saudi's Sadco Capital and Amundi. And there were also several walkout-based. So in other words, there are more and more, apart from ESG sukuk, there are more and more instruments being structured in accordance to the requirement of the ESG. So I think in the interest of time, just to wrap up for the session, so where do you see, what is the outlook of this, particularly in ESG financing, ESG funding, or kind of things? Yeah, not so much.
Right. I think the outlook is clearly positive, as this is an important consideration that goes even beyond Islamic finance. And again, for Islamic finance, it's even more relevant, not only because of its because of its natural alignment with the ESG consideration, but also because of the concentration of the industry in oil exporting countries. Now, oil will remain as an important source of energy in the next several years, and probably some of these countries will be the last standing because the cost of extraction is low. But most, if not all of them, have came up with strategies and plans to diversify their economies and to prepare for the after oil. And some economic sectors will benefit from that. And a portion of this financing will be done in ESG form, whether it's a sukuk, whether it's a bond, whether it's a syndication. Some of it will be done in an ESG form.
I see. Okay, so it's a positive outlook. Yeah, I say that because everybody. I mean, I suppose in the next 3 to 5 years, ESG investment, it's a norm. I mean, it'll be the mainstream of the financing. So, okay, I think we are running short of time. So on behalf of the organizing committee, I would like to thank Dr. Mohammed Damar for being able to be with us today and to share some insights from his perspective as a practitioner. On that note, thank you very much again, and Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you for having me. Assalamu alaikum.
Alaikum salam.